There's been a lot of chatter about this sudden, nosedive in how folks are feeling about the economy.
Yeah.
Consumer sentiment has really taken a tumble, and it makes you wonder what's actually going on.
It really does.
So for this deep dive, we're zeroing in on this pretty significant plunge in U.S. consumer sentiment that we saw back in May 2025.
Exactly. And we've got the Consumer Sentiment Plunge May 2025 briefing doc here. And also this article, Consumer Sentiment Plunge's second lowest reading in history, plus the study guide and glossary.
Okay.
Our goal is really to unpack why this happened, what it might signal for the economy, and, why it should matter to you without just drowning everyone in data.
Right, let's get into it. The number that really grabbed my attention was the University of Michigan index dropping to a preliminary 50.8 in May. Now, for someone maybe not following this day to day, why is 50.8 such a red flag?
Well, the context here is key. 50.8 isn't just, low. It's actually the second lowest reading that index has ever recorded since the 1940s.
Second lowest?
Yeah. The only time it dipped lower was during a really major economic crisis. So think of this index like a kind of collective gut feeling about the economy. And right now, that feeling is, pretty sour.
Okay, second lowest since the 40s. That really paints a picture. And this wasn't just a small dip either, was it? The sources seem to stress how fast and how far it fell.
Precisely. The briefing doc points out it's down nearly 30% just since December of 2024.
30%. That's huge.
It is. And what's interesting is that this sharp drop really seemed to catch quite a few economists off guard. They were expecting things to be a bit more stable, maybe even improving slightly.
Right. So what's driving this? What are the main culprits the sources point to for this gloomy outlook?
Looking at the core reasons, the sources are pretty much aligned. The big ones seem to be persistent inflation and just the rising cost of things people buy every day.
Still inflation, huh?
Still inflation. The briefing doc actually says the drop underscores increasing concern over persistent inflation, rising prices, and the impact of ongoing trade disputes.
Okay, and you mentioned trade disputes. It sounds like tariffs and trade policies are playing a pretty big part in how people are feeling.
That's a really critical point. The Lehnes article highlights that the widespread mention of tariffs and trade policies by survey respondents was a major contributor.
So people are specifically mentioning tariffs.
Yes, and there are growing concerns about their potential to just drive prices up even further. So it's not just about prices now, but this fear that policies will make things more expensive down the line.
And it's not just current costs, but what people think prices will do, right?
Yeah.
Something about inflation expectations.
Exactly right. Expectations for inflation over the next 12 months have really jumped. Consumers are now anticipating, get this, a 7.3% inflation rate.
7.3%. Well,
yeah, that's a big leap from the previous month. And it suggests people are basically bracing themselves for more financial strain. That naturally affects how they feel right now, makes you maybe think twice about a big purchase.
and this feeling, this anxiety, it's not just confined to one group of people, is it? It sounds like it's pretty widespread.
That's right. The briefing document specifically notes this decline in sentiment was observed across nearly all demographic and political groups, which suggests, a really broad-based anxiety about where the economy's headed.
Okay, so we get what's happening and some of the big whys.
Yeah.
But let's connect this back for our listeners.
Yeah.
Why should you care about this drop in consumer sentiment? What are the potential ripple effects?
Well, connecting it to the bigger picture, when consumer confidence is low, it tends to directly impact household spending.
Right.
As the briefing notes say, the persistent erosion in consumer confidence could dampen household spending, a key driver of economic growth. And that poses a real challenge for policymakers trying to stabilize things.
Makes sense. If people feel insecure, they hold back on spending.
Exactly. They might put off buying that car, delay a home renovation, things like that. That caution, multiplied across millions of households, can really slow the economy down.
Okay. Now, to get some perspective, the sources also talk about history, right?
Yeah.
What kinds of things have historically caused sentiment to drop like this? It's not always just inflation and trade, is it?
Oh, absolutely not. History shows it's usually a mix of things. Often, it's immediate financial pain combined with worry about the future.
Like what?
Well, high inflation is a classic one, think the 70s or even the early 2020s, but also recessions or even just the fear of a recession, like back in 2008, 2009, that hits hard.
Job security, too, I imagine.
Definitely. A weakening job market like we saw in the early 90s or 2001 really shakes people's sense of security. And, big swings in the stock market don't help either.
Ah, right. Market volatility.
Yeah, major crashes like the dot-com bust or that initial shock when COVID hit, those definitely rattle confidence. Same with sharp hikes in interest rates, remember the Volcker era, or the Fed tightening in 22-23, makes borrowing more expensive, dampens the mood.
And politics, does that play a role?
It certainly can. Things like political uncertainty, maybe instability like the debt ceiling fights we've had, those create anxiety.
Break sense.
And major policy shocks, too, like introducing big tariffs or the COVID lockdowns, things that suddenly change the economic landscape. Global crises are another factor, 9/11, the pandemic itself. And don't forget housing market instability, like the subprime crisis.
So basically anything that significantly shakes people's view of their own financial future or the economy's path.
Exactly. As one source puts it, in essence, anything that significantly alters consumers' perception of their future financial health or the broader economic trajectory can cause sentiment to drop.
Okay, it's clearly a complex mix, but bringing it back to right now, May 2025, can we just quickly recap the key facts from these reports?
Sure. So the main index number, 50.8, University of Michigan preliminary reading. That's the second lowest since they started tracking in the 1940s.
Second lowest, got it.
We've seen a sharp drop, nearly 30% since December 2024. Inflation expectations for the next year have jumped to 7.3%.
Oof.
And a big factor people are citing is worry over tariffs and trade policies pushing prices even higher. Importantly, this isn't just one segment. The drop is seen across almost all demographic and political groups.
Okay, so this really does feel like a significant signal of, well, widespread economic unease. Considering everything we've discussed, these historical patterns, the current drivers like inflation and trade worries, it makes you wonder, what are some less obvious ways this kind of confidence drop might play out in the months ahead for individuals, but also for the wider economy?
That's a great question to ponder.
It really highlights how interconnected everything is, doesn't it?